Hi everyone, welcome to the Timing Research web show for August 24th, 2015. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be talking about the 100th weekly report from Timing Research. So if you have not had a chance to look at this yet, just go to TimingResearch.com/reports, and you can download this or any past report there. I have Dave Landry of DaveLandry.com hosting for me again this week, so I'm going to go ahead and turn the show over to him.
Thank you, David Kosmeter, and thanks to Timing Research for having me back once again. Looks like it's just me and you, Cameron, so I guess we'll talk about everybody else. For those of us who don't know you, Cameron, tell us a little bit about yourself, a little bit about your trading, and a little bit about DimensionTrader.com. And Cameron is broadcasting from the sun today, in case anyone was wondering.
Yeah, I apologize.
That's okay.
But it's always sunny out here in Colorado, so
well, you look angelic. So it looks like you're coming from. It looks like God is going to tell us what's going on in these markets. So with that said, take it over.
That probably is not going to happen today. Never know. Yeah, my name's Cameron. I've been in and out of trading all my life. Currently, I'm pretty active in an options programs and some future trading. I do some sales and marketing for a company called DimensionTrader.com, and it's got great indicator trading software. Just came out with some pattern trading software. DimensionTrader.com, and I'm the guy that answers the phone when you got questions about that trading software. So that's about it, Dave.
Cool. Cool. Well, for those of you who don't know me, I'm Dave Landry of DaveLandry.com. I believe you can only predict the short term when it comes to markets, but you can stick around with positions longer term through proper money and position management. And that means taking a little bit off once you get to your initial profit target and then trailing a stop higher. I have a 21-page report on that on my website under free reports if you want to check that out. I also have another article that should be out in Traders Magazine this month, and that's going to elaborate a little bit on money management. Once I get the PDF, I'll add that to the free reports section of my website. I've been, like Cameron and other people that we have here quite often, up to a point now where I hate to admit how many years I've been at this. It shows my age, but I've been trading for 20-something years. I stopped counting after about 20. And so I've been around a lot, tried a lot of things, went through that trader's journey I think we all go through, where we add on indicators and we go through this big complex cycle, and then before you know, we're kind of back to where we started and just keeping it simple. So my stuff is very simple. I never said trading was easy, but it's not nearly as difficult as people try to make it. I even, God, what do you call it when you get a copyright? I bought the copyright or acquired the copyright, Trading Simplified, because that pretty much sums it up. Anyway, Cameron, let's go to you. Question of the week. All right, question every week, I guess, is based on any technical or fundamental indicators you want to use. Would you predict that the S&P 500 index, easy for me to say, will higher or lower this week? And that's the close of Friday, August 28th. And once you do that, rate your confidence to that question by estimating the probability you have predicted this week's market move.
Yeah, well, this morning kind of changed everything.
Yeah.
But I tell you right now, I mean, our ticks have been positive here the past hour or longer. I mean, we've been coming back. Hard to say where we're going to close today.
Yeah.
You know, for the week, I tell you what, it is a coin toss. I think we're going to test today's low, if not a little bit lower. But, you know, I'm going to go pretty much with what I said over the weekend here. I do think we're going to close Friday. I think we have a good chance of closing a little higher. But my confidence is I'm almost neutral with that.
Okay.
I tell you what, I wouldn't be putting much of a wager down on this week. Anything could happen. You know, we've got. I mean, anything can happen for a variety of different reasons.
Okay. Well, you know, while we had, let's get the so say 50-50 on the confidence. We'll do 50%.
I'm going to go 50-50.
50-50.
I really am.
Okay. Well, while we have you, it's just since it's you and I, let's just go ahead and knock out the next question. What developing events, technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets. And Cameron, if you want, feel free to share your screen. It seems like our viewers seem to like that when we throw a chart up. So if you want to do that, go ahead.
I should, but I've got everything else on another computer here. Maybe next time I'm on, I'll be set up for that. David told me earlier that was doable, but I didn't get that set up on this one. Well, we have some news during the week that we'll be watching. Obviously, tomorrow's got consumer confidence. Wednesday is durable goods, and Thursday we have unemployment again. I'm not sure to what extent that's going to impact these markets. We got Fisher talking from the Fed. He's going to be talking Saturday. It's a long way out, but it looks like today we're kind of holding in here. So, if we would have had one of these 1,000-point sell-offs on the Dow today, I would have imagined that the Fed would have come in here either later this afternoon or tomorrow and did something. What, I'm not sure.
Yeah.
There's still talk out there that we can see a September rate increase, and there's an argument I heard today that they should do it. I mean, now we've had the sell-off. Let's get the quarter point in there.
Yeah, rip it off.
As to what they're going to do. Do it now, because the markets aren't going to respond that much. Now, if they postpone it and they come out and say it that we're not going to do anything in September, and maybe not for the rest of the year, that could positively impact where this market goes the balance of the week.
Yeah, I mean it's a little bit it's just what they say more than what they do, and I hear what you're saying. They're kind of painted in a corner. If they don't do something, then it's going to be like when and how much, and then everybody goes back to worrying about that. I guess let me give my prediction. I'm going to say lower, and I'm going to go with maybe a low confidence on that. Let me get the P's up here. In fact, I'll go ahead and just share my screen and talk about the next question too while we're at it. Since it's just two of us. One thing I like to do is err on the side of the longer-term trend, and initially when I started hosting this show, I found myself trying to time the market a little bit better. Not better, but try to time the market and figure out where it was going to head for the week, and sometimes that could be an exercise in futility. When I say you could only predict the short term when it comes to market, some of my clients have misconstrued that as to thinking that that you can predict all the markets all the time, all the short term. I mean, you simply can't do that. But getting back to the longer term S&P 500, you'll notice that I have this trend line drawn underneath the bars here, and it's not necessarily under the bars, it's just in between the moving average and the bars to show that daylight, meaning that the lows are greater than the moving average. We've had daylight for a long, long time, for the most part since 2012, and then a lot if you go further back at the chart since 2009, obviously once we got to the bottom there across the moving average. The moving average is not a line in the sand, but it is well watched. The other thing you need to watch out for, and I've been talking about this in my my column on my website, is that we have all this overhead supply here, and this base, once you break out of a base, because traders usually don't agree for long, and this is a long, they've agreed for a long time, then this becomes overhead supply, and that means that people who bought during that base will be looking to get out at break even. Now, the longer and the further you stay below the base, the more important that base becomes. If you just kind of dip below it real quick and come right back up, then it shakes out some people, but for the most part, you don't have to worry about the overhead supply as much. Let me show you one more thing too. This is either a developing shakeout in this market, and we're going to go on to make new highs, or obviously it could be the start of something bigger. Now, notice back here in last October, we had this, what I call a trend knockout move, and the market was very persistent. By the way, this is a monthly chart, so each one of these bars in here is a whole month's worth of trading, 20 days worth of trading. And you can see we had this nice persistent uptrend, 2013, 2014. That's something I really look for in markets, is persistency, meaning that it goes up day after day after day. Now, mathematically, that's equivalent to linear regression, and if you want to plot linear regression, I'll do that for you to show you. See, it's almost the same exact line if you draw the linear regression, but I just keep it simple and draw lines through the bars themselves. And if you can intersect most of the bars, then you've got a pretty persistent uptrend on your hands. Now, notice on a monthly basis in October, we always get that fall volatility, or we seem to get it. And I think we're getting it early this year, by the way, because we went sideways for so long. So I think the fall volatility is now coming in. But anyway, you can see we had this nice little knockout move. Then the market went on to make new highs. Ideally, I'd like to see this bar here a little bit higher up, so it would be knocking out more of a trend. A trend knockout simply means, I call it a TKO or a trend knockout, and that just means that you have people that got long, and then the market shakes them out, and then it goes on to make new highs. It also sucks in some shorts in the process. So the predicament of these traders can help to push the market higher. But now we've got a nice little knockout move. Unfortunately, it's just coming out of a sideways trend, but that's okay because longer term the trend's still headed higher. It's not ideal, but it's okay. But now we're going to have to watch to see if this is the beginning of something or just a shakeout move. And I think I think we're at a very important junction in the overall market. I'm not a huge fan of shorting, but I will short. And as I wrote this morning in my column, shorting, there's two reasons you should short a market. Obviously, if it's headed lower. One is obviously to make money. But the problem with that is that the retrace rallies are really tough, and it's hard to hold on your positions. You get knocked out, and the market rolls right back over. So it's a real pain in the butt. Plus, there's some logistics involved. But the other thing, the main reason is it helps you to see both sides of the market. As I wrote this morning, it seems like my money manager friends that are long only, either by design or by charter or whatever the case may be, they always tend to see things a little bit more glass half empty than glass half full, as opposed to glass half empty. I hope I wrote that right this morning. Anyway, so we did have this breakdown here. The longer we stay below this resistance, the more important it will become. I think what happens next is we see the washout this morning, and let me pull up the spider so we get a true open so I can show you what happened this morning. We had this big gap open, and that's where everybody rushes to the door at the same time. But one thing you'll notice is a lot of time that selling will exhaust itself really quickly. Let's take a look at the 5-minute chart. Not that I'm a day trader, but every now and then you'll get a market that just gaps lower like this. And if you buy it when it takes out that opening range, Toby Crable wrote about this many, many years ago. But you can notice that you just pick up the spiders when they take out that opening range, and then so far they've ran up about 7 points. So a quick little day trade for people who are skilled at day trading. I'm not a day trader, but sometimes the market will give you these gifts, especially when everything's just so the news is so thick you can cut it with a knife. So the fear, I should say. So we had that reversal this morning. I think we're going to bounce up in here for a while. What happens next is going to be concerning. So I think we're going to retrace up, and if we don't get back into this range quickly, I think the market will be in trouble. So the bottom line is, if we don't get back to the range soon, I think we'll be in trouble. But I think we're going to see a bounce over the next few days, and then. But I'm going to go ahead with lower. I don't know if I said it already, but I'm going to go ahead with lower. And I'm kind of with Cameron on that. I'm going to stick with 50-50 on that, so pretty much no opinion on where we're going to end because there's too much that can happen between now and then. And my disclaimers, I have the boilerplate disclaimer for all my shows. And then I say right after that, all predictions are about the future, and a lot of stuff can happen between now and then. So I agree with you, Cameron. I think a lot of stuff can happen between now and then. All right, Cameron, let's go back to you. I promised I wasn't going to talk the whole show.
Oh, no, I'm glad you did. It's going to be an exciting week. And you also see in your chart, can you hear me? I don't know, my chart. Yeah. You can see that wedge pattern here. We knew that something was going to happen.
Yeah.
One way or the other. But we had that nice little wedge from starting in July till now. Those lines together, you can see that. But yeah, I mean, there was, of course, everybody was saying, hey, you better be careful. I'm not sure how many people heeded that advice. I don't think anybody expected what we've experienced the end of last week and today. But anyway, go ahead, David.
No. I was going to say I was just going to go to the next question, and that question is, what are the most important trading-related lessons you have learned so far in 2015?
Huh. Well, right now, don't get too delta positive. To try to stay a little delta neutral. I think for myself, we've had 6-7 years here now of a pretty nice market, a nice little run, and we didn't want to see. I mean, it's been topping here. We've seen the S&P here just kind of topping, right, the past all summer here, all year actually, and I probably didn't heed that as well as I should have. I think I got into last week here. At the end of last week, I was still a little too delta positive with my positions, but you got to stay nimble, and you also got to know when you're wrong. And
well, you're an options guy, and one thing that I've seen is just I don't want to get too far away from the delta thing, but hold that thought. One thing that I've seen with my clients this year is, or I should say my ex-clients, is they were making so much money selling spreads that they felt like they don't need a trend follower anymore. And I tried to explain to them that'll work until it don't. And it's not my way or highway, but if you are selling, just know the nature of the beast, know what you're dealing with.
Yep.
And I have a feeling, and not that I want to be what's the German word, Schadenfreude or anything, but I'd be happy for them to come back. I have a feeling after today, they might be wanting to come back to trend following. But getting back to the question, I'm sorry, I didn't mean to cut you off, Cameron. You just got me thinking about that, the spread guys today. What's the most important trading-related lessons you have learned so far in 2015?
Well, I just said I'm going to watch my deltas closer. I think that's my biggest lesson for myself. Good question. No, I didn't even read that question. I didn't see it in here.
It's buried in the back. So you're gonna want to be more neutral, or are you going to be more inside of the trend when you say watch your deltas?
Well, we don't really have a trend as your chart demonstrates so nicely.
Yes.
We have trended up, but we've been going sideways. And you've got to, in that situation, I would, of course, I think we're all follow the trend and don't stand in front of it, et cetera, all those little sayings that we have. I mean, you can't help but be trend conscious, even if you don't call yourself a trend trader. For anybody who stays in a trade more than 5 minutes, you better know what's going on out there. You better have a global view of what's happening.
Yeah.
We've got a lot of things out here in the political world environment that are going on, and it's kind of scary when you look at what could happen out there from the political side. World economies aren't as the recovery just didn't catch hold like we all anticipated. But personally,
and then they dumped all that money. They took a page out of our book and they started dumping money.
They are. But you know what? I don't think the sky is falling. I think here in the States, things are not that bad outside of the oil patch. You go up here to Denver.
And that's probably overdone, don't you think? The oil patch thing.
Well, there's growth. There's building going on. There's an attitude that's very optimistic, I believe, here in Colorado. And we've got a great economy here. Our state economy has been doing very well. And, I don't think earnings season was all that poor. It certainly wasn't a negative earnings season. Even today, with what's happened, and the market's still down about 181 points, although the ticks are very positive. Apple's back up in positive territory. Netflix is up in positive territory.
Those were getting creamed on the open, or pre-open at least.
They did.
I didn't watch them on the open, but I watched them pre-open.
I'm showing Apple had a low of $92.
Wow.
Today. I don't think anybody could have got in there, or I think a lot of things did open either at the open. I mean, it took a while to get this whole market opened.
Yeah.
From my understanding today. But hell, even CarMax is out of negative territories, is positive for today. So some of these, what does that say? It keeps me coming back saying that
a little bit overdone, huh?
Yeah, I think the sell-off's overdone for a while. And again, if you go back to China and what's happened in their market there's very few, even though billions of dollars have been lost, but it's only been lost by really a handful of people, relatively speaking, to the size of that population. The common person in China doesn't play the market.
Yeah.
There's fewer people percentage-wise who are involved in their market. As here in the United States, we have a lot more people involved in our markets, and people do quit spending money when we have when we get into a downtrend and things get tight here in the United States. But I'm not necessarily certain it's going to impact Apple like a lot of people think it is. The regular guy in China, he's still going to buy his next iPhone. Is my feeling with that.
Well, but I think I hear you, and I agree with you on that. But I think that Apple has kind of reached a point of maturity now that it's made it all the way to the Dow, and then they split like 6-for-1 or whatever it was. So once all that stuff starts happening, it's kind of like the fat lady's not singing yet, but she's warming up a little.
Yeah.
One thing I wanted to show you guys before I forget, and then we'll go back and wrap it up with that question, Cameron, is that one thing I've been noticing, like this is a 2-day chart of the Russell 2000. Sometimes when the market gets a little choppy, I'll back the chart out a little bit, go to a 2-day or a 3-day chart, and then I'll also look at weekly charts too. But I do most of my work off the daily, but every now and then back it out to see the forest for the trees. And one of my patterns, and you can get this from the free reports too, there's nothing proprietary about what I do, but very simple pattern. You're looking for bow tie moving averages, 10 simple, 20 exponential, and 30 exponential. And I usually put a 50-day moving average, a simple one, just because it's a well-watched moving average. Now, this is a 2-day chart, so everything would be doubled on this. But on a 2-day chart, notice that the moving average is crossed over, and then they took out the low in here. Let me see if I can get a little trend. I'm working off a new computer here, so I don't have everything set up perfectly. But once this low gets taken out, it confirms that the trend has changed. And until you get back to new highs, especially like after you have a big retrace rally like we had up in here, just looking at that first on a daily chart, as long as you don't get to new highs and pass this retracement, it confirms this as the top. So far, the Russell 2000 is topped. And what concerns me there is I'm a big small cap type of trader. I look for inefficient markets, and the Russell 2000 represents the type of stock I'm looking for. So that has me a little bit concerned when it goes to markets. Cameron, I didn't want to. I just want to bring this up before I forget about it. Any other lessons or anything else you want to flesh out or talk about?
I think that, what you just showed, I think, is very revealing. That and the bow tie. We read a lot about that. I think all the other markets have experienced that similar pattern with the moving averages here, the bow tie, so to speak. And it's a pretty interesting phenomenon when you see that occur. And look at what we're looking at right now. What you're showing held true. Everything you've just described, it happened from a technical standpoint.
Now, one thing I forgot to mention was you don't want to trade these when the market's just trading back and forth. You want to short a market when you're coming off of all-time highs or multi-year highs, because that means the most amount of people are on the wrong side of the market. And then my people who know me are probably their eyes going to glaze over because I show this chart so many times. If you take a look at a weekly S&P, and I have an article actually that goes out today. It'll be in Proactive Magazine, which talks about this exact same thing. But you had a bow tie, and let me get a weekly chart up real quick. You had a bow tie down in 2000 on the weekly, and then you had one up after the 2002-03 bottom, and then you didn't get another sell signal until 2007. Believe it or not, a weekly early in 2008 it actually triggered, and then the weekly took a little while to cross over because the market went up so quickly. And keep in mind that indicators will have a little lag to them. I like to see indicators more as illustrators than indicators. They don't really indicate what's going to happen. They indicate what happened. As a trend follower, you will be a little late to the party. But we did have a lot of buy signals, same sort of patterns on a daily chart in 2009. And then you can see that we've had a pretty good run even after the bow tie. So you're up over 100% or more than a double at least since then. You can see on a weekly basis, the S&P 500, we're now turning down. Now, one thing I learned recently, I actually learned it from a friend of mine, Greg Morris, so I give him credit, but I didn't realize that as soon as a price crosses an exponential moving average, that exponential moving average will be immediately turned down. I guess that's why the bow ties actually work, because that moving average is quick to catch up. So you can see on a weekly basis, we're coming off all-time highs in the S&P 500. So if that crosses over, now, maybe it's due to be wrong, but it's been right for about 20, 30 years, So just that longer-term trend following is important to watch. And then the other thing I notice, I'm always picking on people because I think you can simplify your systems even further. But one thing I notice is just following this 50-week moving average, which on a daily chart would be a 250-day moving average, And when the slope is negative, like it was in early 2008, it would have kept you short the market. And when the slope is positive, like it was in 2009, it would have kept you long the market. And you can go back in history and study that. It's pretty amazing. Now, you don't want to, if the market gets choppy, you don't want to try to chase your own tail with this moving average kind of stuff. But as a general framework, it can really help you to be on the right side of the market. Okay, I guess I'll answer the. Anything else on that, Cameron? And
No.
I guess I'll answer the question.
Good job. Good job on that.
Thank you. Thank you. I appreciate it. That's the problem with the shows. We don't have enough controversies, what somebody once said. As far as lessons learned this year, it was more of lessons relearned. And one reason I love to teach, and Karen, I'm sure you feel the same way, is that in teaching something, you just learn it more and more. And then I see a lot of people make a lot of mistakes, and it reminds me not to do that. So that's one advantage I have as an educator in the business. And then the other is that, like I said, it does also it helps me to simplify things and just see the forest for the trees sometimes. The lessons relearned this year were to be very selective in your stock selection and be a good stock picker. And somehow this year we were able to do okay. We didn't set the world on fire. We did fairly well in spite of a sideways market. And that meant being super selective in stock picking. And then over the last several weeks, almost several months, we hardly had any setups. And I was boring my clients to death by telling them to just sit on your hands and sit on your hands. And that's just a lesson I wish I'd have learned 20 or 30 years ago, that you don't have to be in and out every day, driving yourself crazy and losing your money. Sometimes you just want to sit back, like Livermore said, let everybody else fight it out and build a foundation for your next venture. So that was an important lesson. Another one was just stick with the trend of individual stocks until proven otherwise. This market has been a little questionable on and off throughout the year. And if I would have exited all my positions every time it got a little iffy, I never would have caught any trends. Now, you will, on an individual trade basis, or even occasionally the market might crash like it's doing now, whatever you want to call it, and take you out of everything. But longer term, you're never going to catch a trend if you quit at any sign of adversity. And then the other thing, the other lesson, learn to relearn, is that let the market make decisions for you. Throughout this year, we've caught, as I said earlier, we caught a few good trends. But over the last few months, and especially over the last few weeks, the market has been pruning our portfolio. The stops have been getting hit, and we've been taking stocks out. We came into this market long 2 stocks today, and one got taken out this morning, and one actually did a reversal this morning without hitting the stop. So that one's still open. There's no need to rush out and close that position. Maybe that's going to be our big, huge winner for the year that makes our whole year. So money management is always key. Following your plan is always key. And not trying to make something happen when there's nothing to do. And for successful people, and I've written and talked about this extensively, successful people, it's very hard for them not to do anything. They feel like they always have to be doing something. And in the markets, it's just the opposite. Sometimes you just sit on your hands and wait for your pitch. I mean, if you're a doctor or a surgeon, you're going to have to go cut on some people to make some money. You're not going to make anybody sitting around your house, right? But as a trader, you're not going to make anybody trading, but you're certainly not going to lose it if you just sit on your hands and wait for the market to come to you and not try to be in and out of the market. And the only other point I want to make is that obviously when the market tanks like this, you wish you were more short than you always are. You're never short enough. But if you're a novice trader, just realize that, of course, they slide faster than they glide. Things come unglued really quick. And I think what people might be looking at now, or might be tempted to look at now, is like, well, geez, the signs were there. This market looked like it was rolling over. But it sort of looked like it's been rolling over all year. And if you'd have got short throughout the year, as choppy as it's been, I'd be willing to bet that you probably would have lost money on all those positions. So you'd have lost money on 20 positions, and then you make money on this one position today. Would that be enough to make back everything? Probably not. So after you would have wasted a lot of energy and probably a lot of money shorting every time things are just kind of a little iffy, as long as you're stuck in a range. So I think that's lessons learned and relearned this year. So it was more of a relearning lessons than learning anything new, at least for me. Cameron, anything else you want to throw in on that?
No, you're right on. You gotta trade your plan. You don't chase something today. You know, you have that. I think it is a natural instinct that we have as traders that we want to be involved. We want to. Yeah. You know, and you know, if you didn't have something on to take advantage of what happened the past 3 days. I know you're kicking yourself, but you know what? There's always another bus. Stick to your plan.
Yeah.
And that's good advice, Dave. You can't overemphasize that.
Yeah, I found it's kind of weird, and this is something that I just kind of, the blog has been a wonderful thing for me too, because I'm able to get all these thoughts out, and it reminds me what to do and what not to do. And one of the things that I talked about, following the plan obviously is important. And where's it going with this? It'll come to me. I lost my train of thought there. Yeah, you got to follow your plan. I mean, that's vitally important. Don't get too caught up in the news, because that'll just, you end up chasing your own tail. Greece was a big deal not that long ago, and I haven't heard anything about Greece in a while. Of course, I don't watch much news, but anyway, it'll come back to me, that other lesson. So.
Well, put it in the blog. Put it in the blog.
Yeah, I'll put it in the blog. I'll just go back and look. It's probably like 3 columns ago. It'll probably come to me at the end of the show. Well, kind of short and sweet today. Cameron, anything you want to tell us about Dimension Trader?
Dimension Trader. If you get an opportunity and you are a futures trader, take a look at TimingResearch.com. They just introduced some brand new ABC pattern trading software, which actually is pretty cool. It displays in anticipation of the next pattern that we're looking for. And if you're not an ABC trader, there's a lot of instruction on our website how to do that. We're good at teaching people how to trade these patterns. This particular software is called the X Trader. It displays the instructions along with the current pattern that's going there and what to anticipate next. It's really very cool software, and you can actually get a free demo this week. Go to the website, and you'll see right there in the lower left-hand corner how to register and get yourself a demo. And we got some training webinars tomorrow that you'll be all signed up for. DimensionTrader.com.
Cool. Yep. Well, as I said, I'm Dave Landry, DaveLandry.com, and if I could get my screen to share here, we could do a. Let's see, is it working?
Yeah, I kind of wish I would have set some up on this computer here, and I could have shown you some things as well on that pattern trading, which is revealing depending on the time frame that you put on there.
So if you, I don't know if it'll let me do it. Let me share a screen here to. I guess it'll let me do the Hangout screen, huh? Let's try this.
Yeah.
And then if I go over here, it might. Yeah, it goes into infinity. Is it showing the website?
Yeah.
Oh, cool.
Yep.
Okay. The only thing I want to point out on the website, if you scroll down on the right side, here are the appearances. Obviously, this is today's appearance, and there's a countdown to 0 because we're actually in the show now. But on this, you'll see that I do a weekly chart show, and use it up here at the top. Any questions you have on trading, bring them to the chart show. Chart show is free. It's every Thursday at 11 o'clock Eastern, 10 o'clock Central. And I take questions. I take user requests. So if you want to shoot me an email ahead of time, ask me to explain something, I'd be happy to do that. In fact, I would welcome it. I would enjoy the fodder for the show. So check that out when you get a chance. And also, I have a free newsletter. If you just click right here, you're going to get the blog when I write it, and information on webinars and things like that. I give out a lot of free stuff. I also have a YouTube channel. I have 1,300 or almost 1,400 videos now. Over 1 million minutes watched, so I'm pretty excited about that. So check out the YouTube channel if you get a chance, and check out the videos there. Cameron, any closing thoughts? Anything else
nope.
you want to?
Nope.
Okay,
everybody
cool.
Just be careful. Be careful this week.
Yeah, absolutely. Well, let's see if I can stop the sharing on this. Okay, there we go. Okay, well, David, I'm going to turn it back over to you. Thank you so much for having me back again. Thanks to TimingResearch.com. And the floor is yours. Thank you.
Yep. All right. Thanks, guys. Great show. So I just want to remind everyone who's watching that you can go to TimingResearch.com/reports to download this or any of the past reports there. Also, be sure to go to TimingResearch.com/current survey next weekend and fill out the survey before the next report is released on Sunday afternoon. And be sure to join us again for next week's show. let's see. Neil Batho of TraderReview.net wasn't able to be here today, but he'll be back soon. Next week we'll have Matt Buckley of Top Gun Options back, and a few other people. So want to thank Cameron Yost of DimensionTrader.com for being on again. And, of course, Dave Landry of DaveLandry.com. Thank you for hosting again.
Thank you. Thank you, Cameron. Good. It was good.
Thanks,
Good
Steve.
show.
All right, you guys. Good
Thanks,
job,
guys.
everybody.
Thank you so much.